CEO at Market Rebellion joins us, Marc LoPresti. So this has been good to see you, Marc. The thing that people have been looking at is like, well, will this be a bigger and bigger story as the year goes on? Have we escaped the worst? Will companies eat the cost? And now it's like bits and pieces, like PS5s for PlayStation prices going up, stuff like that. And the question is there more of this on the way?
So listen, of course, Connell, first, great to be with you again. Yep. This is, as you point out, a big week for the big box bellwether retailers. Earnings season so far, Connell, going spectacularly. Even Goldman Sachs chief economist yesterday saying one of the best earnings seasons on record, and that's true. Companies have beat EPS, earnings per share expectations, at a rate we've not seen in over 5 years. That's good news. But here's the bigger news to your question. Here's what companies aren't doing. They're not revising their guidance. They are not changing what they're telling investors the future looks like. It's one of the few times we get to look in to a crystal ball on Wall Street. Lowe's didn't change their guidance. Today, also, you had obviously TJ Maxx, the Target, Home Depot, also not changing their guidance. That tells you a lot about whether or not we're going to see the trickle-down tariff costs hit the consumer. Not so fast.
Or maybe does it tell you they don't know, or that there's not enough visibility?
Well, that's the whole point of guidance, right? So CEOs have the choice to either revise guidance, confirm guidance, or do what a lot of people on Wall Street said CEOs want to do after Liberation Day, which is take guidance away completely.
Get rid of it. Yeah, right. Get rid of it. And you're not seeing that. So what do you think? So so then paint the picture for us of the rest of the year. We get a little bit of price movement to the upside on certain items, but overall you're saying the economy, it sounds like if you're listening to the companies, you think the economy holds up pretty well.
I think the economy is doing very well, Connell. And here is the potential fly in the proverbial ointment of Wall Street. And it is, of course, Chairman Jay Powell, who is out in Wyoming having his annual Jackson Hole Jamboree. Everybody's going to be looking so carefully to see what he says on Friday in his comments. Is he hawkish? Is he dovish? Does he say, I'm going to sit tight and watch the data? We need that 25 basis point cut in September, and the street thinks we're going to get it.
Yeah, pretty much guaranteed still, right? Or no, has that changed? I mean, we're going to get it. I mean, I know there's been debate in the past, and every time by the way, when Trump was yelling about it, there wasn't real expectation it would happen. Whether it should have happened or not is a different conversation, but there wasn't real expectation. But this time there is. People are counting on it.
There is. So that CME Fed Funds Watch tool that everybody looks to that's pretty darn accurate, particularly as it gets closer to the FOMC decision date, is showing about an 86% chance of a first 25 basis point cut at the next meeting in September. Here's why that's important, Connell. If you bring down corporations' cost of capital, cost of borrowing, corporations can reinvest, they can hire more, it helps the overall economy and the employment picture, and it offsets the tariff costs. That's what's so key about this.
So let's have one quick conversation then about the stock market, transition away from the macro economy for a moment. So the last couple of days, it's been interesting. It's not like it's huge considering where we are, but particularly in tech, you start to see a little bit of a pullback from these highs, right? So that people say, well, maybe these valuations were out of control and stocks were just too much, and we're going to start heading in the other direction. So focused, especially on tech, but in the market in general, how do you see the stock market now for people investing?
Yeah, so first of all, Connell, as Warren Buffett famously said, right, buy low, sell high. We've been hitting all-time highs day after day after day, led, of course, by Mag 7 in the tech sector. When you want to sell something, when you want to take a little risk off the table, you sell the stuff that's up the most. We're coming into this July commentary from Jay Powell. You don't want to have a lot of chips on the table with a wild card like that. I'm not surprised to see a little bit of profit taking, and it's a little based on the numbers, right? Yeah. Obviously, some parts of tech taking it on harder than others. Those more valuable or expensive companies is on an EPS, earnings per share basis, of course, but I am not worried about this little mild sell-off.
All right, good enough. Good discussion. Thanks for coming back on with us. I'll talk to you soon, Marc.
Always a pleasure, sir.